Thursday, July 11th, we're having some major bearish engulfing sell signals today in the stock indexes. This is, sorry, the 11th Thursday market analysis, Stan Ehrlich. Again, we're having some major bearish engulfing sell signals that I warned you about in some significant detail yesterday. We're at that 90, which is very rare level of overboughtness, which is not really a word, but it is now. And that is a very dangerous level. Whenever I get very, very high, and I'm using in general 90 because it works fairly well. It may be 89, it may be 91, 2, 3, but around 90. I watch for sell signals, and we've got one the next day today on some of the indexes. QQQ missed by a hair. NASDAQ NQ is huge, and we got a great short sale going. This is also the E-mini, has a bearish engulfing, was overbought. We're short the E-mini. Let's look at and I provide tutoring, by the way. Go to my website, ERSIGNALS.com, and check it out. Now, the 1 minute chart on the E-mini made new lows, lower than yesterday's lows, has bounced a little bit for the last several minutes, about, I would say, a half an hour, maybe a little less. Yeah, 25 minutes, and may have stopped the rally already. I'd love to see new lows, and closing below today's lows would tickle me pink. This yellow line is slightly under the low of yesterday, and that's why we got the red bearish engulfing daily bar right there, and why we've turned red on the 1 minute, and we are short. Now, the spider SPY, same thing. Huge bearish engulfing, red sell signal. ERSIGNALS is short the 1 minute chart. We have a small loss at the moment, and it's rallying. Not worried about it. Our stop is here. I could accelerate that down, maybe just a little bit above that high if I wanted to take a smaller risk. That's adjustable. I call it the kicker. It moves the trailing stop. But remember, my trailing stop is not a distance from the lowest low, although that's part of the calculation. It also has to do with what level the daily RSI number is at, or got to, on the way down when you're short, and then on the way up when you're long. Next chart, QQQ, opens at 630. The other indexes that were opened before 630 got higher than the previous session's high. This couldn't quite do it. It missed by 20.24 barely, not getting higher than yesterday's high, but way below yesterday and the day before and the day before, and just barely touching the lows of the 4 days ago, which I think is going to be taken out. I think we're going to have a bearish engulfing covering 4 previous days on the NASDAQ, which I'll get to in a short moment. So we don't have a higher high. We couldn't get a bearish engulfing going. The NASDAQ futures did so a few days ago, and we are still going down, generally speaking, as a result. Here's the 1 minute chart for the NASDAQ. And wait a moment. There we go. Very sorry, looking at the wrong date. This one particular chart has a problem. I am not noticing as quickly as I should. Today's nighttime, so to speak, before 6:30 California time, rally high was easily above the high and a new historic high. And then, boink, the PPI came out, caused the move down, or started it. Now, look, PPI was supposed to be a little bit higher, 0.1. That's not particularly conducive of lower rates and a bull market with inflation. But it came out 0.1 lower instead of higher. A reversal caused a sharp rally. giving us the higher high for the trend. But now what's next? That's the key. You got to be thinking about 2 steps ahead of everybody else. The marketplace says, good news, it rallied, but what's coming next? And it couldn't apparently come up with a good answer. And now you start getting profit taking, and it starts to push prices down. And all of a sudden, people realized that wasn't good enough bull news, good news. It was just enough to cause the rally to make the higher highs before 6:30 in the morning. And down we go. So now on the 1-minute chart for the NASDAQ, we're short at what time? 7:22 this morning. And that's when it got below the previous day's low. The actual rally high, because of the PPI number, was at 5:30 this morning when the numbers come out. So good news, but not good enough. Profit taking, kaboom, signal created, go short immediately, automatically. Trailing stop, I have made adjustments to this to get it as tight as I can get it. And we are protecting a whopping profit already. We're not stopped out. It has to hit our little trailing stop here, which it has not done. It's come extremely close. Again, I manipulated this on purpose to tighten it like crazy. I like it that way. Once I have a profit, I don't like giving a profit back. Now, how much of a profit, that's up to you. If it's too small, well, then it's probably not worth protecting. Maybe it's simply worth lowering or raising whatever is appropriate, your stop, to reduce your risk factor, your loss factor. Next chart, YM Dow Jones. Like the news, still is up, but not holding on all that well. The 1-minute chart shows at 5:30 the news. It did react back to where it began and even a little lower, but remember the Dow is the 30 industrials, and they're not that dependent upon interest rates as much as the NASDAQ stocks, which are not the well financed. They do borrow more money more frequently. So big cap, I should say. That's the phrase I was trying to think of. Lower capitalized are more sensitive to interest rates. So the NASDAQ's hanging on. The Russell, wow, huge rally, high and last, going in the opposite direction of the NASDAQ and the spider. Like the Dow is going up and the Russell's going up also. So very, very rare circumstances. I have to tell you, people, I don't remember when the last time I saw a big rally in some stock indexes, and they're still at their highs of the day. In the same time, there's new lows for a significant number of days by a significant amount in some of the other stock indexes, and they're staying at their lows at the same time. Very rare. Makes me think of something profoundly important for a turning point. Here's the Russell 1 minute. And I know I'm spending a lot of time on the indexes, but they're very important. So let's go look at the bonds. Bonds rallied, good, no surprise, coming close to previous high. I keep telling you, we have a intermediate to long-term bull market in progress. I started talking about that, gosh, way back when we had our first bullish engulfing, October of 23, and a gigantic rally, which we still are not higher than that. But that's the last day, December 27th, when we thought the Fed was going to stay steady or even lower rates right away. They didn't. They stayed flat, basically. And therefore, the bond futures drifted down. Now, on April 25th, we're starting to get the message filtering through the market that, yeah, we're not too far away from rates going down. And now that this PPI number flip-flopped from up a little to down expectation-wise to down a little reality-wise, We're about to make a new high, probably today, tomorrow, the next few days, next few trading days in bonds. 10-year notes did it already today. Now, we don't have, I should have a green circle around this buy signal in the bonds a few days ago. It's doing extremely well. The 10-year notes had a bullish engulfing also, but did not get oversold in the allotted previous number of days for the strategy to come up with a buy signal. If you look at the bond RSI, it was below 25 on July 1st. On July 1st, the notes were down to 26.27, not below 25. Yeah, super close. Yeah, the market had a bullish engulfing within a few days. It could have, would have, should have been green, but we didn't quite get the RSI. Code is black and white. There's no iffy. Gee, it's close. Maybe. It's either on or off. Next, overbought conditions in crude. Now we're looking at a move down to support, and we just bounced a little. I think this is something I'm going to have to wait a couple of days to explain more. I'm going to pass on an opinion on crude. I will say this. If we start closing below 80.80, it'll probably drop off a lot more. On the other hand, and I'm not sure which way it's going to go here, if it goes above 84.50, then it's probably going to make a new high for the move and move up a lot more. RSI right now is just dead neutral in the 50s, 55. We are bouncing off a little support. So my favoritism is fairly up. I'm not sure. I don't like this. No comment. Natural gas. Excuse me. Support holding, but not very well. We're low and last, barely in new low ground, double top in progress, minimum downside objective in progress would be a little under 2. Right now we're 2.2. And I do think it's going to stay down, go down, and get down to that 2 level. Where it looked like we're going to close around the end of the week below a previous support area. That allows for a free fall. Next, heating oil. Bearish engulfing on the top, almost on the high day. Next day down, next day down, next day down, and today we're just barely higher. We're still short. There's where we got short the beginning of the green trade line and pointing to the current tick. I wouldn't be surprised to see it make new lows today or tomorrow and break below this little support area, which is not that big a deal. I'm liking the way it's acting. I'm bearish. I'm short. We got a signal. I'm going to lower the support area down a little bit. That looks a little bit more appropriate right around in here. It's a little bit fuzzy down here. There's some lows, some lows, some lows, some lows, a little higher, a little high. Okay, that was slightly better, I think. The top didn't change, and that was tested yesterday, and we came close today. Looking for lower levels. Gold, silver, platinum, copper, then we go to grains, and then we go to meats. So, new highs, gold, for the last couple, well, since May 22nd. But almost 71, very close to overbought, a little bit more strength, right up around previous tops. It's going to get overbought. I think it might get overbought around these highs and then turn back down again. Silver, basically the same story. Very close to overbought, might rally up closer to the previous tops and turn down. That there's something else important in silver I'll mention in a moment, but that doesn't hold up in gold. Silver could be forming a top formation, one of my favorites, head and shoulder, but I'm not going to go into the details until it starts to turn down, and I think we've got our last shoulder high. Platinum does have a head and shoulder top, is relatively symmetrical, not quite perfect, but close enough, and has turned down approaching the neckline. We need to close below this yellow line. And if we close below that line, we have a downside breakout, and a move all the way down to almost 800 would be expected, predicted, and looked for if everything, follows the plan. So a rally today doesn't kill the head and shoulder. I could easily allow it to go up, I suppose, to 1042. I don't think it's going to do that. But as long as it doesn't make a high higher than the last shoulder high, I can allow it to come relatively close. This is okay. I mean, it could stop right here and turn down. Anything in this ballpark. All I need to do is see it start to make new low closes for a few days or more, and then I think in maybe hours from a downside breakout. Next, high grade, down chunky, big down move. We did have an outside down day at one particular point in time, but it didn't stay that way on the close yesterday. So overbought conditions, stop the rally. Don't see anything else here that I can talk about except I'm bearish. We got extremely overbought when it did top out way up here. Too bad we didn't get a bearish engulfing at the top. Next, beans, oil, meal, corn, wheat, cattle, hogs. Beans and grains in general. Just simply, slowly but surely, and sometimes quickly, breaking down into new low ground, long-term, sometimes 2 to 3 years of new low prices on a continuation chart basis. And that's what beans have done. And you'll see here others that have done, corn in particular, and the others that look like they're just about to do it. Oil finished its rally, started to drop a few days ago after being very overbought, actually got up to about 90 on the RSI on the high day, like the indexes. Now today it's bouncing a little, but yeah, that's okay. A little double bottom should cause a move up to 51, but I'm extremely skeptical, basically because of the bearishness across the board in grains. So I'm looking for new lows, a test of 43, and that is going to start to kill the long-term possible bottom formation that I've been very skeptical about for weeks if you've been watching my YouTubes. Next is meal, and it did make new lows for a couple of months yesterday. It is up a little bit today, no big deal. I do expect it to make it down to 325 and lower. We did get a sell signal on the second high of the double top. Perfect. This is working great. Next, corn, like beans, but before beans, broke out to new low ground for about 3 years. That's how long it's been on this continuation chart. You got to go back to April of 21, March of 21 to get down to the same price levels. Well, April, okay, big deal. 3 years plus. Long-term bearish on corn. I know, climate change and all that, but you got to wonder, drought resistant maybe? I don't know. It's just the corn prices are dropping. This chart says, look out, long-term bearish. What about wheat? Almost. And I think it's going to look like corn very soon. We've been coming down for quite a bit, almost new lows, bouncing just a little bit, barely hung on yesterday, not oversold yet. I think we're going to see new lows again any day now. Cattle, a little bit of a bounce, did get overbought in a resistance area. Very nice. Turning down, I think it's going to go lower. And our Miss Piggy. We did get a buy signal. It did work for 2 or 3 days. We got another one creating a double bottom. It did work for a few days, not very much, but both of them worked. Trailing stop would have provided profit potentials. Depends upon how tight Are you a scalper, or swing trader, investor? Your stops move super fast, or relatively slow, respectively. This has made a new low for the trend completely yesterday. Downside breakout. Any and all of my stops, no matter how tight you wanted them, are now completely out, and we're going to go down some more. But today, we just barely got oversold on new low ground, and we are coming back reasonably well. And we gapped down yesterday. Remember, gaps are almost always closed. So I think this gap is going to be closed, and then we're going to turn into new low ground. One problem. What happens if we get above yesterday's high and stay higher on the day on the close? You'll have an official ER buy signal, another green bar. That could change the situation. That could turn this into a bottom for a while. But I got to see it happen. I got to see the follow through. And then I'll scream bloody murder, a brand new intermediate or a longer term buy signal. But if it just stays around here and doesn't get above yesterday's high, then all I can really look for is a little bit more strength to close the gap, and maybe up to 89 or something, or a little higher, 90, and then down. The trend is your friend, and this is a bear trend unless I see red bearish engulfings like that one, the top of a head and shoulder top, and you don't know that the day it happens. You only can be expecting a head and shoulder after the last shoulder starts to form. Then you can scream bloody murder. We sold the top of a head and shoulder top with a bearish engulfing, and now you have a brand new downside objective, which worked great, and then it came down a lot more. So I'm a little friendly at the moment, but basically bearish on hogs, except let's find out later, tomorrow, if we can get a bullish engulfing out of today's price action. Yes, then I'll turn bullish. No, I'm still bearish. Next, a bearish engulfing back on the E-mini, getting close to the lows again. Wow, we just about almost making new lows. Looks like maybe by a tick or two a few minutes ago. Have a profitable trading day. Profitable trading to you.